Today on the Compass Wealth Conversations, we have Don Quante, a 40-year expert in helping clients plan ahead for their need for long-term care. He's a lifetime member of the $1 Million Roundtable, the prestige top of the table, and a 2022 Hall of Fame inductee. He's a best-selling author of 2 books, Tax-Free Money for Long-Term Care and Don't Go Broke in the Nursing Home. His mission is to empower advisors to help their clients make informed decisions about long-term care planning to protect their family and their legacy. Don, welcome to the conversation.
Hey, Brendan, good to see you again, buddy.
I know it's been a minute. Because you have 2 best-selling books, and then I actually got the ability to work with you through Don't Go Broke in a Nursing Home. I got to co-author it with you. So since then, since we've done that about 8 years ago or so, right? We've been in contact, kind of like a mentor to me with the long-term care. What has changed since we wrote that book?
Oh boy, man, a bunch has changed. I think we could start maybe with COVID. That sort of turned everything upside down for, many American families, right?
Absolutely.
But as it pertains to long-term care, a couple things came out of COVID. One, when you watch the 5 p.m. nightly news or the 6 p.m. nightly news, depending on what part of the country you're in, and you saw people who were literally locked down and they couldn't leave a memory care unit or assisted living or a nursing home, it really rattled, to the core of most people, this idea that if I get sick, I am never going to a nursing home, right?
Yeah, absolutely.
Um, and so one of the things that has changed dramatically is how people think, feel, and act towards the topic of long-term care. And I was reading recently that a study that was done by Motley Fool, and they asked the question, if you got sick and needed care, where would you want to receive care? 88%, actually slightly over 88% of the people said they would want to receive their care at home. It's the reason why there is absolutely a caregiver shortage in this country. I mean, if you think about like what's going on with AI, you'd think that the number one position that's going to need to be filled in the next 10 years would be software engineers or something along those lines. It's not. It's home healthcare aides. Excuse me.
Mhm. Well, you see that. You read a lot of articles out there. You're looking at that. The crisis is there. You're seeing home care agencies maybe more popular these days because of that 88% that are looking to be taken care of at home. But there is a crisis, right, of home health care givers to give you that kind of care you need to get at home.
No doubt. No doubt about it.
We help people protect their legacy, right? We're helping people protect their legacy, make sure they can have care the way that they want it. How can we, as advisors and people out there having these conversations, how can we see what kind of caregivers the crisis is? How can we get them to help actually work with the clients?
Yeah, yeah. So, well, I think it all starts with the advisor uh, asking the right question. And so, if it's a consumer watching, this podcast, and your advisor hasn't asked, you should talk to Brendan because I know he'll ask you the first question, which is, look, if you got sick, where would you want your care? And, Brendan, 88% of the time people will say at home. But that's really expensive. In the part of Pennsylvania that you're in and that part of the country, the Northeast, you could be talking about 10, 12, 15,000 a month for home care. Average claim period, when you consider everything's a little over 4.1 years. So you're talking about needing, if it hits your family, maybe $500,000 to cover the ability for somebody to be able to remain at home, potentially more if it's assisted living or nursing home. So, so I'd ask people, ask those questions. And then the second question you got to think about if you're a consumer is what, all right, so I'm going to need to come up with a 500,000. Which of my assets, think of them as buckets. I've got IRA, I've got maybe annuities, life insurance, checking, savings. Which of those buckets am I going to go to first? And let's say you said, well, I'd have to take it out of savings or my IRA. Well, the third question, and Brendan, I know you're really good with your clients asking this is, all right, well, if there was a better way to use that bucket, there's a way to peel off a little bit of it and get something that's new. And I know you're going to ask about it probably if you haven't already thought to. get a guarantee issue long-term care contract. That now exists. So that is one of the things that's changed since the last time we talked, man, is and 8 years ago we didn't have guarantee issue. Now we have the ability for even people who might be watching your show who have already had they've already been diagnosed with Parkinson's. Maybe they have dementia already. We can still, you could finally are in a position where you can help those people.
I was actually just going to jump into actually Parkinson's and dementia because of that fact
Yeah.
is that you mentioned 4.1 years for just a regular for care. But if you have Parkinson's, Alzheimer's, and we talk about dementia, you're looking at an average stay of about 8 years. So that $500,000 is going to jump up to about over 1 million, right?
Yeah, no doubt about it. And what's one of the biggest crisis that people haven't figured out yet? It's the fact that if they don't have a plan in place, that literally the issue of needing a lot of money to be able to stay at home could wreck their retirement plan. The chance of there being money there for them, and then maybe their goal was to pass it on to the next generation, is likely not going to happen if they don't get this one thing right.
And if they don't get it right, you mentioned guaranteed issues. So if we have something that somebody has pre-existing conditions, right? Something that maybe somebody has Parkinson's already, or is starting to show the effects of Alzheimer's, every 66 seconds, or dementia, right? Because I know they all have the wave. How are they getting guaranteed issues?
Yeah, so here's I'll give you 3 examples, that recently, I'm aware of that took place, and a couple of them were in your great state of great Commonwealth, excuse me, of Pennsylvania, right? Um, and the first one, was a lady who was, early 70s. She, is beginning to have some mobility issues. She's 5'4", but she's a little over 300 pounds. So pretty much every insurance company out there said no, they couldn't insure her. But we were able to actually find the company that I'm speaking of, which has the guarantee issue. And they said, look, if you, for every dollar you put in, we'll pay back $3 and it'll come out tax free to help you pay for home care, assisted, or actually even nursing home. And what's cool about that one is it allows her family members to step in and provide the care, and she can use the money from the policy to pay them. So you say, well, how can they do that? It's because the client is not going to be paying a monthly or an annual premium. They're going to put a lump sum in. In this case, the lady was putting in $200,000 from her savings. It's still there, it's still her money, but if she gets sick, it's worth 600,000 tax free. And the way that that happens is the benefits are vested a little bit each year for the first 5 years. When you get to the 5th year, anytime thereafter, 100% of it's available. So that's how they do it.
That's a great added benefit nowadays, right? So because you have the traditional, you have the links benefits, you have life insurance with riders, you have asset protection, right? And now you have this guaranteed issue. So across the board, whether you're healthy or unhealthy, there are options for people that actually need the care, especially when you're talking about Parkinson's, dementia, all time.
Yeah, 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 no doubt. And when you ask the questions of yourself, if I got sick, where would I want care? Everybody, like I said, says at home. But if you're thinking, well, you know what, I would use, I might use my annuity. I own an annuity now. I might use that. And let's say you have 100,000 in it, and then you say, boy, but my problem is I was just diagnosed with Parkinson's. By the way, the diagnosis of Parkinson's is up, if I read the statistic right, 60% over the last 5 years. And if that's true, and Parkinson's last a long time, then you're going to want something, right? So in an example like that, under the guarantee issue structure, what the insurance company says, all right, well, wait, the Parkinson's presents a slightly different underwriting risk. So what we're willing to do is if you put a dollar in, we'll pay out $2. For every dollar you put in, we'll pay out. So you put in 200,000 into that, you'll get 400,000 out tax free to pay for the cost of the Parkinson's care, the long-term care that you're going to need down the road, whether it's at home or not, whether it's with a family member or not. And then the last thing on the guarantee issue, so I don't forget it, is even if somebody already has dementia and they're receiving care, we can give them a 37 percent increase on an asset. So if they have 100,000, we can show them how to ultimately over that 5-year period get $137,000 out of that. And that again, because of a law that was passed in 2010 called the Pension Protection Act, you can get all that money out tax free.
So why aren't advisors, wealth advisors, talking about the Pension Protection Act? Because it's been out since 2010. I know that you and I talk about it, but it's across the board. They're not doing it.
Yeah, when we did the Pennsylvania edition of Don't Go Broke in a Nursing Home, you and I did the research together and we found, look, all right, so this has been around forever. How come advisors aren't talking about it? And the reason I believe that that's the case is most advisors have become too busy trying to be all things to all people, right? They're trying to manage money. They're trying to help people with their taxes. They're doing a little bit of everything. And, so while I know you do help lots of families in your practice, I know you have a special place in your heart for helping families with this long-term care because of, the issues that you had happen with your grandma many, years ago. So I think, unless an advisor has had a personal experience like you, Brendan, their clients just aren't going to get the right advice, and that's why, I've encouraged anybody I know in Pennsylvania to come see you.
Well, thank you. I appreciate that. Yeah, my nana, we called her Nana. She was in the memory care ward over at Fitzgerald University, which was next door to the hospital. And right around the time I was getting married, that's where she was there, right? And I went and saw her the day we got married. But she was taken care of, but she wasn't at home. She wasn't with family. But she was unable to attend our wedding or any of my brothers or sisters' weddings because of this, what was going on.
Yeah.
But she could have been taken care of at home. So,
Right.
at that point, it's always been something that's stuck with me. So when I got into the business and we started talking, that was something I brought up then. And that's why I got into, the family practice of making sure that there is a long-term care plan, or at least offered the plan, because it's not offered most times across the board.
Yeah.
But the other thing I look at is like, you're in a portfolio, you have a wealth manager, right? The problem is that when the markets are bouncing up and down, you're seeing that if you're taking distributions just to cover healthcare, you're losing even more money in your portfolio. True?
Yeah, no doubt about it. I mean, I would liken it to an additional market loss. So, if the market's going down in any given year by 10%, and you have to take another 80, 90, 100,000 out of your portfolio to pay for care, boy, you've withdrawn the money at exactly the worst time you could have when the market was down, right? But you have no
Yeah.
choice because you need that money. So that's why, I mean, I know firms like yours do a great job of making sure that people, just peel off a piece of their assets, set it off to the side, let that money be there and be worth, 2 times, 3 times, 5 times, 6 times as much to pay for care. And again, because it's long-term care, you get to take the money out tax free. The fact you can pay friends and family is a big, is a big plus. I
Absolutely.
mentioned we talked about caregiver earlier a little bit, but there's a caregiver crisis going on in this country right now, and the most recent statistic is that there's 53 million family caregivers out there. So when you think about that for just a second, you're like, okay, 53 million people. That means they're not taking a promotion at their job. Oftentimes, by the way, it's the ladies that are affected most, right? It's typically the oldest daughter in the family. She quits her job, or she doesn't take the promotion she could have got. She's not working as much, so she's not saving as much. She's not putting as much in her 401k. And this is going to have really far reaching consequences 10, 15, 20 years down the road. So, so the ideal here is that if you have guarantee issue long-term care, why would you, if you were the caregiver, not have mom or dad get one of these plans? Be in a position where it can create tax-free money. And yes, I know I was talking to an advisor last week. He said, yeah, but the daughter won't accept payment from the mom. She would if she knew it was coming from an insurance company, right? And that would help her offset some of the lost income she had. So this whole caregiver thing is you're going to be seeing more and more about that as time moves forward.
And then going back to the Pension Protection Act, because that was back in 2010, they just came out with a new bill. They call it the Beautiful Bill. Now, how will that impact long term care? Right? Because there's a lot of information in there about Medicaid and Medicare, things of that nature. So, how would that
Yeah.
affect long term care going forward?
That's a really great question. So the big beautiful bill that you're referencing that just passed what in the last week or so.
Mhm.
Um, and by the way, not a political statement, but the big beautiful bill may not be so beautiful as it pertains to people who were going to rely on the Medicaid system to pay for home care. Now, it's not clear exactly what's going to happen, but at first blush, it appears that people who live in rural areas could be affected first as it pertains to what's called home and community-based care. I know there's a lot of senators, a lot of congressmen in these rural areas pushing back heavy, but the law's already passed, right? So unless there's some amendments or there's some, workarounds, people are going to see, less uh, Medicaid home care benefits. And by the way, for the people who are watching today, Medicaid was designed for people who have nothing left. It was designed as a safety net for the poor and indigent. It wasn't designed for people who have assets. So if you have assets, the correct way to do this, take advantage of the other law that Brendan has cited a couple times called the Pension Protection Act. And that's where, again, under the Pension Protection Act, Congress says far back as January of 2010, put an asset in here. It's still your money, but if you get sick, based on a little bit of underwriting, and again, guarantee issue, we're gonna put in 100,000 as an example, and you're gonna get out 300,000 tax free. Again, you can use the money for home care, assisted skill care. I know I'm sounding like a broken record, but at the end of the day, that's the correct way to go about it, regardless of what eventually the big beautiful bill does do. But you can't have a situation where you have almost 10,000 baby boomers. They're going to start turning age 80 on January 1st. I know when Brendan, when you and I wrote the original edition of Don't Go Broke in a Nursing Home, we were talking about 10,000 baby boomers turn 65 each and every day.
Yep.
Well, or that had been happening at that time for some years. Well, now you fast forward, and oh, by the way, that first baby boomer, if she's still alive, January 1st, will turn age 80. And then somewhere in the neighborhood of 96 to 9,700 a day will continue to do that, turn age 80. So when you think about that, I mean, we have a perfect storm coming. So if you're watching this show, you've not done anything about long-term care, I'm going to encourage you to reach out to Brendan and, have a conversation. At a minimum, get the answers to those three questions. If I got sick, where should I get my care? At home. What asset are you going to liquidate? And then if there's a better way, take a look at it, at the end of the day.
I know we're not lawyers, but we're talking about Medicaid, right? So there are the Medicaid spend downs in every
Yes.
state, right? Everyone has a different level. In Pennsylvania, you have to spend down to $2,900, right?
Yes.
Joint assets, you can keep 124,000 of the IRA, you keep the home. What does that do? And what have you seen it do to the spouse that is healthy or is living longer than the spouse that is sick when you get to the Medicaid spend down, right?
Yeah, yeah. So under Medicaid spend down, it's the payment source of last resort, we like to say.
Mhm.
I don't think anybody who's healthy today that knows what the differences are, and I'll share them here in just a minute, is signing up for that as their preferred way to pay for care. Because what they're really doing then, if they are, is they're saying, hey, give me a one-way express ticket into a nursing home where I've got a roommate, because these are all semi-private rooms, as you know,
Mhm.
right? So you can have a roommate. You can't control whether they snore or not. Something as simple as that, right? You can't control really which nursing home it's going to be, because it all comes down to if they have a Medicaid bed available or not. Um, the pressure that's on the nursing homes with the limited amount of money, because you see, they don't get the same payment that a private pay person pays. The state gets a significant discount off of that. as a way of doing business with these providers, and it's not good. It's just not. So to circle back around with your question about what about the client, the wife of the person who's on Medicaid. Well, let's face it, if she spends down her assets and she can keep I think the new numbers 100, a little bit shy of 160,000 in most states. I'm not sure about Pennsylvania. But in that range, right? Less than 150,000 is what the healthy spouse can keep. The other portion can be used to be spent down on, a list of things. But the reality is that when the person who's on Medicaid dies, that now the person who's left, in most cases, it's a widow, she's left with half of the Social Security, or she's at least loses a big chunk of the Social Security, because what happens when you die, if your husband and your wife are receiving Social Security, is the smaller of the two Social Security checks disappears. So imagine having just drained most of your savings, at least half of it is gone. You've got half of it left because Medicaid allows you to keep half of it up to that 160,000 number. And now all of a sudden you don't have the same income you've had. So you've lost your spouse. It's been grueling on your health because in many cases, the caregiver of somebody, particularly with dementia, dies before the patient does. That's how hard a work this is. So not that money fixes everything, but the ability to plan today while you're in your, 60s or your 70s, even early 80s, while you're still healthier. We have guarantee issues, so even if you have health impairments, not a problem. I mean, there's no good reason to not do that other than people don't know. So I wanna tip my hat to you for having people like me on your show to educate people a bit, because maybe, just maybe, somebody watching will say, I'm gonna give Brendan a call in and at least have the conversation about this, right? Because that's really where it all starts, with the conversation.
Yeah, because most people are, like we talked about earlier, are not having that conversation. They had never had the conversation, or they don't have to talk with their family. Like, how do I want to be cared for? Right? Where do I want to be cared for? You mentioned that the 88% or over 88% want to be taken care of at home. If you're on that maybe that Medicaid track because you decided to go that route, you have no choice. You have no choice to be taken care of at home.
That's right.
So let's talk about or switch gears for a little bit. What role is technology, AI, or crypto advisors having in terms of long term care? Because I know
Yeah.
it's a newer topic.
Yeah, no, 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 no. So, so technology is an interesting thing. And I read the other day, they said that if the average person began using Chat GPT or one of the competitors to that you could increase your IQ by 20 points, because that's how smart artificial intelligence is. And so, as a person who's now a baby boomer myself, a couple years away from probably retiring. It's a scary proposition for many of us, right? That that someday there'll be robots doing jobs, and that there will be Uber taxis picking you up, and there won't be an Uber taxi driver in there. I mean, that's scary. But as it pertains to long-term care, I think it's a good thing. Part of this goes back to COVID, right, Brendan? When COVID happened, all of a sudden you found delivery services delivering groceries to people's front doors, right? I mean, I like to call it the Sheila Amazon effect. Everybody knows Amazon. The Sheila effect is my wife, and I'll give you an example of how it's changed insurance here by telling you the story. My wife called me at the office, and she said, "Hey, honey, we got some new bath towels." Now, of course, like most guys listening, I said, "Well, I didn't know we needed bath towels, right?" But we needed them, apparently. It's 10 o'clock in the morning when she tells me this. I forgot a file back at home on the desk of my home office. So as I frantically go through the front door trying to get the file to get back for a meeting, I trip over a package. Guess what? It was 3 o'clock in the afternoon. It was the darn bath towels. So the ability to order something at 10 o'clock and have it on your porch at 3 o'clock has created this attitude that we want what we want and we want it now. That's the American way. We want what we want and we want it now, right? That does not change when we're talking about insurance. So the guarantee issue program that I know you're very fond of has the ability for the client to, through a video camera, much like the one we're using for your podcast, to actually interview the client. So that's where the technology piece comes in. They can interview the client, right, through technology and make a underwriting decision without ever having to get your doctor records, without you ever having to do a physical, urine specimen, or blood specimen. None of the stuff that people would have been used to for buying insurance before is required anymore under this process. And when the video interview is done, at the end of it, Brendan, the insurance carrier will send you an email telling you that your client's approved. And remember, since it's guaranteed issue, it's just a question of, is it level 1, level 2, or level 3, right?
Hmm.
At level 3, you're getting, 300% increase on the dollars you put in, right? So technology has changed the long-term care insurance space in the biggest way by what I'll call speed. The ability to get something approved and issued in 30 minutes or less is something that I would not have believed even 6 or 7 years ago could happen during my lifetime, but it's happening. So technology's played a pretty big role.
It is amazing where we've gone from the Amazon since COVID. I remember the stories of people not being able to get into the nursing homes to see family members and for all to transpire and come to, 88% wanting home care. You know, it does change where the world is going and how fast you can get that interview done. You can get it done in 30 minutes or less, depending on the interview.
Yes.
So to wrap it up, coming up, what advice would you give someone if they had a second home to pay for assisted living with dementia? Like, what advice would you have for them?
Yeah, so the most recent thing I've seen is the insurance companies have begun lightening up on the idea of taking equity out of a secondary home, or possibly doing a reverse mortgage. And in many cases, I know clients have a home, maybe it's worth, four or $500,000, and it's paid for pretty close to it. Think about that equity as dead equity. It's not really doing anything. It's going to pass to the family, but it may not pass if you get sick and have to sell the house, right?
Right.
So what often, or what's happening more times than not now, is people will withdraw maybe 100 or 200,000 of equity from the home, put it into a pension protection act account, and get the leverage of, as we talked about, 2 times or 3 times as much. And when you lay it out, depending on the age of the person, it mathematically makes a ton of sense and it looks really good. So, even for those people who are sitting here thinking, "Boy, I don't have an extra 200,000, that I can't that I can part with right now," the equity in the home could be an answer.
Oh, that's some good advice because I know that I did read a couple ideas lately in articles that said they are using some of the equity in their home to help pay for care instead of spending down the assets or just not doing anything, right, and just selling the house and going that way.
Yes.
So, Don, I really appreciate your time. I know you're very busy, but I appreciate you. We've done the book together. It's a great time talking to you. Anything else, advice you could give? One last clip for the listeners out there.
Yeah, no, I think, the thing I would end on is, it's never too early to have a conversation about long-term care. And if you think you have health impairments that would stand in your way of being able to be approved, throw that thought out the window, because with guarantee issue long-term care, simple phone call to Brendan, could change the way you feel. I know when we put our coverage in place, my wife Sheila said, "I've just got a different peace of mind now, knowing that if either of us has a stroke, or one of us comes down with, one of the 70 different types of dementia, that we're going to be okay financially." And, so the peace of mind and how you feel after you've done this type of planning is pretty cool.
Don, I appreciate your time. Enjoy the rest of your summer.
Thank you, buddy.